Hello everyone and welcome to another Elliott Wave forecast video day. My name is Eric. Today is the 8th of April around 3:30 p.m. Eastern Times. And today we're going to take a look about the indices. We're going to take a look at the indices. We're going to talk about the indices. As every time that the indices sell, the world's coming to the end. The traders get in panic. And at the end of the day, they end in losing opportunities. In Elliott Wave forecast over the years, we always believe that the trend in the indices always gonna be bullish. Of course, we do not pretend that it's in a straight line. The market never moves in a straight line. But the trend overall, the grand super cycle, is gonna be always bullish. In 2009, we did the correction within the grand super cycle. And there might be a day again that we might do a correction within the grand super cycle. We believe that traders, like I said earlier, they get in panic. And I believe that they start overthinking, they start listening to a TV station analysts around the world that they hold a bearish view about the indices because they cannot understand the critical thinking part of the indices, which is that the indices is a reflection of the human progress. The world is not the same today that it was in 1920s. 1920s, the car are not the same as the car that we drive right now. The planes are not the same. TV are not the same. It's human progress. It's better. Consequently, the index is always going to be bullish. You need to keep that in mind if you're going to be a successful trader and understand that buying the indices instead of looking to sell the indices is the right side. Now, what happens today, or where are we today? We are in a very interesting stage across the indices. We did a seminar back in November the 2nd, I believe. The recording of the seminar is here. It's called The Market and the U.S. Election. Does it really matter? I challenge you guys to watch that seminar. Everything that we say is taking place. Indices trading to new all-time highs, and now they're pulling back. We knew that 2025 gonna be very choppy. Yes, in February, we were calling a little more outside in the indices. Why? Because we never pick a top of a bottom. We would rather have a run at the top by having right 10 times before that being peaking every single high and covering the end of the war and every single high and then getting right only once. So the market is selling and it has been selling. And this is the S&P. We're going to talk about the S&P. And this is the grand super cycle in the S&P from the all-time lows. I understand that they are charts going back to the 1800s. I know that, but that's not the S&P. That's things putting together right there with the S&P. So the selling that is taking place in the market is being used. The market has been used the tariff and the fundamentals around the U.S. imposing tariff around the countries in the world, right? But the reality of the matter is that is not the case. The reality is there is a technical profit taking. This is the charts of the S&P. This is the 100% here. The 100% extension between the Kobe's law and the 22-second low, right? 2022 lows, right? The relationship between this low and this low is the highest here. And that's what the market is selling. This is the chart of Elliott Wave forecast early in March. The index was still sitting at the highs. Like I say, we were expecting a putback. Look at the putback here. Yes, for highest price. Yes, we do it on purpose. Why? Because why? Because it did imagine a new high here. I'm gonna call the wave 3 peak over here. Why? Or I'm gonna call a wave 1 here. Why? If it's still above these lows, if it hasn't denied the extension, we never pick the highs. But I want you guys to put your eyes and focus in the area, in the expectation from the area. We were expecting this selling from that area. Yes, it reached the 100%, and we were looking for the 1.236. But we knew that the market was mature and the market was about to sell. This is the yearly forecast and Elliott Wave forecast, the yearly forecast for 2025. For this year, you look, let's logging into the site, and I'm going to show you why we're doing this and why we're trying to help you guys, non-members around the world. This is the yearly forecast right here. If we go down to the end, in the conclusion, look at our conclusion to members. And what do we say? We say the whole market is entering a very similar situation to the end of 2021, when the market was over here, 2021. We say we are expecting the cycle from 2022 to end, right? We're expecting the cycle from 2022 to end this year across the indices and define whether the market will correct the whole cycle and create a nest or just do a wave 4. And that's where we're going next. We knew that that's going to happen. That's where we're going next in the video, to explain to you guys the possibilities, right, into the nest led to the long side. So knowing that the cycle from 2022 was about to end, we need to decide if this is a wave 4 or this is a nest, right? We need to decide. But one thing that we know is that this is not the peak in the indices. One thing that we know is that this should not be a crash across the market. One thing that we know is that this is an opportunity to buy the indices, right? At this stage, this is the grand super cycle. Whatever numbers you see in black, those are swings. That's no Elliott Wave. Those are swings. Meaning, when the market trend in an impulse or move in an impulse, the sequence that the market follow is 5, 9, 13, 17, 21, 25, 29. As far as I can see from the all-time lows in the S&P, this is 1, 2, 3, 4 in COVID, 5 2020, 21, 21st, 2022, and now 2025 right here. I got 7 swing higher to the upside, and this is the 8th swing. That leaves me with 2 possibilities in the S&P. Either I'm going to call it a super aggressive. Super aggressive, I call it nest. What is a nest? It's a series of 1, 2, 1, 2 with an acceleration in a wave 3. How does the nest look like? We get back here. Let me show you a nest, right? And the nest goes like this: 1, 2, 1, 2, 1, 2. That's a triple nest. In the case of the S&P, I can make a triple nest I can make a quadruple nest. A quadruple would go like this. One here, two here, then you go one here, one Kobe, two here, then I have to put one here, another two here, another one, and another two. That's a quadruple nest. If I want to do a double nest, I can go, or I can do a triple nest also. I will put it here. I will put it here. Yeah, no, that's a quadruple nest. If I want to do a triple nest, I will go this way. Or a double nest. I will put 1, 2, 3, 4 with Kobe, 5 ending in 2022, wave 2 in blue ending in 2022, and 1 and 2 now. In that case, the market will hold the lows of 2022. And the market have no other way to explode to the outside. I am not a fundamental trader. I'm a technical trader. I believe that whatever President Trump is trying to achieve, it won't be the end of the world. I believe that he's been criticized in many ways. I don't know the end game here. I'm not a fundamental trader. But the technical part of the market can point into the idea that the biggest acceleration we ever seen in the market is about to happen. If this possibility is gonna take place, then President Trump will be a genius if that's the case, right? He would be a genius if that's the case. That's one path. The other way is that the S&P right here is finished. You got the 7 swing, so you need a 9 swing. And then it's going to be a new rally and then the correction within the grand super cycle. But the message is that in either one of the two scenarios is an incomplete sequence to the upside within the grand super cycle. And we need to buy the indices, not to sell the indices. Back in 2008, many Elliott Wave traders, they were calling the S&P right here to, after seeing the 5 weeks decline in 2007 to 2009, they were calling the S&P to do 3 weeks, 1, 2, 3, and then calling an ABC back, right? They were calling that. They were, and they have the reason. They didn't show the flat taking place from here, but they were calling that. They see a clear-cut 5 weeks here. But there was something in 2008 that we saw in Elliott Wave forecast, is that the moment that we broke about these highs, we eliminate this possibility. But we use a concept that we developed that is called the market is running out of space. Back in 2009, when you look at American Airline here, look at American Airline. He was trading at right here at one moment, he was trading at 127 a share. And the peak over here, the S&P peak around 2007 here, it was hard to see American, unless it goes out of business, to break this low, because the green light there is the 0 line. It's 0 below there. It's 0 right here. So the idea that the S&P is going to make from here another leg lower, Americans do not have the room to do that. Another classic example is when it comes to the gold trade. Many Elliott Wave traders, when gold was over here, many traders believe that the declining gold right here from the 2011 peak, and God forgive me, from here up to here, it looks like a five-way impulse. I won't tell an Elliott Wave guide that that's not 5 weeks. It looks at 5 weeks. But in Elliott Wave forecast, we were buying gold over here, and we were looking for 3,000. You know why? Because silver do not have at the moment the room to make an ABC from 2011. If we put silver here in the same chart, right, and we get back in time to 2011 peak, let me see, yeah, right here, yeah, gold looks like a 5 weeks here. But silver, it was very deep. It was trading at $13 an ounce. Silver will do an ABC, is gonna trade below zero. That's called running out of space. In today's market, what do we have? We got JetBlue. This is the zero line. It's running out of space. JetBlue is running there out of space. There. What else do we have? American is running out of space. When you put everything together, this decline for the technical 6128 in the S&P is not about what President Trump is doing. The market makers are using that as an excuse. This is about a technical sell-off from the area. This is the proof. We were expecting that. We were expecting the selling. Discount, by the way, got almost, is still valid, but we are about to overlap. So it's going to leave us only with discount, the super nest, or the 4 and 5. This is the super nest, or it's going to leave us with the 4 and 5 in red. Our members already know when to buy the indices again. And we devote a tremendous amount of time today in the live session telling them, don't be afraid. Don't be afraid of the selling. Buy when the market reach the areas that we are expecting. In COVID, right here, everyone was afraid. We were telling members to buy when Nikkei reached the blue box area. There will be instruments, not the S&P. The S&P decline is very linear to the downside, but there will be indices and stocks and ETF showing the buying area because they are not linear. So the combination of those indices, which are not linear to the downside, and they're showing a clear three-way structure, and the many stocks like Carnival, like JetBlue, like American, running out of space to the downside, is a very unique opportunity in which it might be the case that whoever's being criticized now with the economic policies and all the stuff, and not a fundamental trader, it can be a genius after all. Let's see. That's the future talk. But what is clear, that this is a unique opportunity that many retailers trading ain't missing because they don't have the backbone to understand the market as a whole. They just follow the S&P. If you look just at the S&P, of course you're going to get it wrong most right. You need to look at the market after all. And that's the video for today. I hope this gives you guys hope and a strength to get in front of the selling so you can be making money down the road. If you like the video, as always, we invite you to join us. We got a very nice promotion now. 14 days trial for just $9.99. Usually, 99 cents. Usually it's $9.99. Join us. You won't regret it. Have a good day, everyone.